Closing beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day. All is going the way you want it to. This is a quick show we do called The Closing Beat. We just go over the stock market for the day. We'll cover all of that. We're financial advisors here at Jazz Wealth. I wear the shirt every day so you guys see it. Hope you keep us in mind if you have an account to transfer, old Roth IRA, 401k, rollover, something like that, or if you're working with an advisor that's just really not staying in touch and is really just not someone that reaches out every week and wants to teach along the way. That's the most important thing to me. I like people that like to teach, you know. Try to always work with services where people like to teach. Help you learn a little bit more. We'll get to that here at the market in a second. We're also playing a game called Guess the Dow. Go to jazzwealth.com/guess the Dow. If you want to take a shot, do the closest without going over, we'll send you a $100 gift card, no strings attached. That's that one. Also, a little housekeeping. Next Monday, there will be no closing beat. It's also Martin Luther King Jr. Day, but and Friday. So next Monday and Friday, there'll be no closing beat. I'll be in Gainesville on Friday at UF if you want to stop by and say hi. Going to the gymnastics meet there with my daughter, so have a good time up there. Also, our class this week will be on the backdoor Roth IRA, how they work, how we do them here for you. And so if you're one of our customers, just go right on into the dojo. This is the dojo here, and what happens is this screen up here at the top at Thursday at 8 o'clock Eastern Time turns into a live broadcast there. You're able to see those classes. You can also go back and see all the previous classes if you like, everything from support classes to really geeky classes and everything in between. So feel free to check that out if you are interested. I just realized I don't have this thing set up real quick, so give me just a second to get this guy set up. But anyways, you can go check that out and hope you enjoy that one. While we're waiting here for a second, quick shout out to Mr. Sean. Sean sent us in some money, right? We've got a wall of dough going on here at Jazz, and so he sent over some dough. Check this out. See if you can see it there. We'll let the camera kind of adjust. From Guinea. Really cool, man. That's the front of it. That's the back of it. Looks like a real crisp sort of paper currency here. Didn't really do the research on it, but thanks, Sean, for sending that in. If you have some random dough that you're not using that's foreign currency, you could also sign $1 if you like, I guess, and send that in if you want. But we're building a wall of dough, so we're just going to put it all over there. Money from around the world. Just fascinated by that stuff. I like looking into things like that. And so that's what we had there for you. Thanks, Sean, for sending that in. Much appreciated. Here we go. The stock market today. The Dow higher by 32. The S&P lost 5 by the end of the day. The NASDAQ lost 22. Basically, earnings and trade were the focus today. Econ news was pretty light. We had a consumer price index come out, which is a Fed kind of tool that they watch, but it really wasn't anything exciting. Won't cause them to change anything that they're planning on doing. So the stock market started off the day sitting here at highs. Actually, the S&P poked to new highs. The NASDAQ poked to new highs as well, but unable to close up there. You had some weakness in Apple and some other tech names in there. The Dow was the only index that was higher on the day. The Russell was higher on the day as well, but the Dow was the only major index that was higher today, although it did not make new highs. So for the S&P, you've got record highs just sitting here, chilling out at record highs. Not much new to go on. Earnings season has caused just a slight uptick in volatility here so far, and not too bad. So we'll cover that as it happens, of course, but for the moment, a real steady and consistent uptrend there. And a little stat for you, I saw on CNBC today that this is now, well, this, including today, will be 68 straight days, consecutive trading days, without a drop of 1% or more in one day. So, you know, we saw that and thought, well, that anytime something gets put in front of you, any kind of stat or any sort of opinion or anything, you go, is that a lot? Is that a little? Is that good news? Is that bad news? Give me something. So in a little bit here, we'll cover the stats on those consecutive trading days to let you know how that goes, and you know we got all the goods for you, so we'll cover that. Let's go over to your sector breakdown here for the day. You look at financials, you just didn't have them today. You need the financials to get the markets to move higher. You didn't have them today, although you had pretty good earnings across the board, minus Wells Fargo. Yeah, the financials still sitting at new highs, well, basically at highs, but unable to get anything done here today. You had a couple earnings get started here to kick us off. The banks are kind of getting things underway. JP Morgan up 1% on the day. Really good earnings. Just a good result for them all around. Earnings were up 30%. Revenue was up 8%. Their banking did really well. You know, they got the branches now like everywhere. There's branches being put up left and right. Their banking did well. Consumer deposits did well. Credit cards did well. They're offering credit cards like crazy. Their bonds trading department, which would be in their market making division, did well. Good income from them as well. All look really good. The only negative was net interest margin. That was their only weak spot there. It's just because of low rates. It's just difficult for them to make money off your deposits right now. But JP Morgan's decided they're just going to go put up 1 billion branches, take in as much money as they can, because when rates go up, they'll do really well there. But for now, that was the only real weak spot for JP Morgan. Still had a good day. Didn't quite make new 52-week highs, but continuing its uptrend, looking really good there. We'll go over to Citigroup next. Citigroup was one of the new 52-week highs today, up 1.5%, looking pretty good. Consumer banking was good, investment banking was good, trading revenue was all up, basically pretty good. Some of these banks have issues with expenses. So JP Morgan said they kept expenses in line, which is crazy considering how much they have expanded. But operating expenses were up 6% for Citigroup. So a little bit of a weak spot there. The stock was still up 1.5% on the day. So no big deal. Real investors pretty much gave them a pass. One people that didn't get the pass today, which breaks every stat that was out there I shared with you yesterday, down 5% on the day. That's Wells Fargo, headed back down to the 200-day moving average. Profit down 50%, not looking good there. Their costs were an issue as well. Legal fees from their ongoing issues at Wells Fargo, not too good. They also lost 212 advisors. So if you happen to be a Wells Fargo advisor that's thinking of leaving there, give old Jazz a call. Maybe we could use your help. We'll see how it goes. So Wells Fargo advisors just leaving. That's only about 3% of their advisor base, by the way, but just shows that people have had enough. Even financial advisors losing faith in the company, at least in the short term here. So the stock moving back down to the 200-day moving average. And because of that, that sort of weighed down the financials today. At least the big financials. We use the XLF to track that with you. And so they were kind of weak on the day. Semiconductors and tech stocks did okay. Semiconductors were up a little bit, but remember, you need both of those. You got to have both of those to get things moving. Didn't have it today. Communications services pulled back a little bit, down about 1/4 on the day, despite some good news out of Disney. Disney recovered itself from the 50-day moving average today, gained about 1%. There was a report that the Disney Plus app has now been downloaded over 40 million times. So Disney Plus looking good. For Christmas, actually, I got the Bob Iger Masterclass. Really good. I don't have a partnership with them or anything, but that was a really good class. Just sort of a calm, motivating personality there. I really like Bob Iger. Anyways, 40 million shares, 40 million times plus that the app was downloaded there. That's good news, right? We'll see if that can generate into some revenue. They spent a lot of money on that, remember, and still are spending a lot of money on that. ATVI up 1 1/3% on the day. There's a positive article out of Barron's on this one, so got a little boost from Barron's. ATVI looking pretty good. Dish coming back towards the top of this range. So any technical sort of automated system or whatever is going to draw this little trend line right here. And you got the potential for a little bit of a break. So you got a series of higher lows. So every time the stock sells off, people are unwilling to sell it further and further. So a series of higher lows along the way and a series of equal highs there. What that tells you is if you break above this here, people get excited about that. They kind of see it as the coast is clear in the short term. You'd see technical traders jumping all over that. Back to the highs of the range. Didn't really see any big news on their end. I looked around a little bit because I know Verizon just changed their pricing, how they're doing, cable, internet, and phone and all that, but didn't see much on Dish. All right, going over to transports, they poked up to new highs today, just barely. Actually, did they hit? So you got a high of 198.25. Yep, just barely got up there. So new highs for the transports overall. It's going to be your airline stocks. Delta reported earnings, not too bad there. Delta beat by 30 cents. The CEO said obviously it was a very strong holiday season. So 3 1/3% gain for Delta on the day. That's helping the transports. United Airlines was higher to start the day. It finished higher on the day, but still a little bit lower. Added 1% on the day. Airlines helping out. And then there was a news right in the middle of the day. Caused a pop in FedEx there, up about 2% with Amazon. So third-party sellers are now going to be able to use Amazon again for their shipping. Remember, it wasn't too long ago that, it was less than 2 months, I believe, that Amazon said they weren't going to allow third-party sellers to use FedEx until they got their act together. Well, apparently they worked it out, so all is good there. Tech stocks pulled back a little bit today, down about 0.5%. Remember, this is the sector that is, during earnings season, is typically the best performer. Average gain of 2.2% and is positive 72% of the time. Yesterday started that off, it looked really good. Today it gave back a little bit of that, but that's what you have there for tech in the short term. Gold closed down $6 today, continues to pull back as everything seems like it's calming down, right, as far as Iran goes. Any kind of safe haven trade is, at least off the table for now. People that have invested in gold, seems like they've largely taken their profits. And when you watch the markets kind of tearing off without you, it kind of forces you to say, well, made some money in gold, I guess I better get back in the market. So you saw a little bit of that today. Not too bad. Some of the individual stocks there, you got GameStop. Pretty bad day for GameStop, down 13%. Holiday sales were lower by 25%. That's not good. These guys are already struggling. All the GameStops in my area have officially been closed. Just overall, not too good for them. I saw Five Below recover. It's almost recovered everything from its earnings gap. Yesterday, gap down over 20%, closed up off its lows about halfway. Today, it has recovered a little bit more, up 6%. No news, just people just buying the dip on that one that believe in Five Below. Teva Pharmaceuticals, I didn't see any news on this one, up 10% on the day. Could be the JP Morgan health conference that's going on. There's a lot of news coming out of that. I don't follow the biotechs as much, so you're not going to get a whole lot more than that out of me. And Shake Shack, up about 6% on the day. I didn't catch too much news on that one either, but broke above these recent lows. So maybe some short covering, a little bottom picking on this one. Stock higher by 6%. Elsewhere, what do we have? Ethan Allen says it expects its earnings to come in a little bit weaker. Let's see, where did the shares finish there? Ethan Allen actually closed down only about 1%. Took a hit on the news initially there, but closed down 1%. Yeah, let's just go through it here. So 74% of the S&P 500 is above the 50-day moving average. That's basically the same as yesterday. No new news to cover there for you. You had 57 new 52-week highs today. Out of the group, the worst performer is going to be MasterCard. MasterCard lost 1.5%. I'm going to guess that had something to do with Visa swooping in and buying Plaid, the fintech platform that connects banks to all those apps that you use, budgeting apps and things like that. Visa added about 1/3% on the day. So I'm going to bet that was probably part of the news. First Republic Bank, higher on the day, 4.5%. That is earnings related. So regional bank did well on earnings there. Did have a little issue with their costs. So if you look into their earnings report, costs were a little bit higher for them as well. But all in all, investors saying they like what they saw. Eli Lilly continues to be higher here. It's done nothing but move higher since they bought out that other company that has a drug they think they can make about $1 billion off of. So 1.25% for Eli Lilly, still ripping away there. Applied Materials and LRCX, there's a couple others in the semiconductor space, that stick out as stocks that were strong and hit the 52-week high list today. Nike broke out of a tiny little bit of a range there, real sloppy. I talked about this yesterday. Breakout stocks to the upside where you've seen bases near the upper end of the range. If you're a technical person, you've had to loosen your loosen your expectations there a little bit. All the breakout traders like to see a nice tight consolidation at highs. We're just not getting that out of a lot of them, so they've been more sloppy ranges. Just means you take a little bit more risk when you bet on that breakout, which means you're going to buy less shares, which means the pop tends to be a little bit less exciting if you happen to follow that. Did a video on that a while back. Some of the other banks today, Goldman Sachs hit new 52-week highs, looking really good there. Citigroup also 52-week highs. We talked about that, reported their earnings, and Morgan Stanley as well. Now, earnings-wise for these banks, you've got tomorrow Bank of America, BlackRock, which remember, who was it, Needham? Deutsche Bank said BlackRock will outperform the stock market during earnings season. BlackRock has their chance to do that tomorrow. They'll report earnings. You got Goldman Sachs, PNC Bank, U.S. Bank. That's all for the banks. You also have United Healthcare and Alcoa and Kinder Morgan will be reporting earnings as well tomorrow. No 52-week lows at all, actually. No 52-week lows. Before we get to the stats here, I saw an article about the Tesla rally being a short covering rally. You could check that. So I think that article, maybe by somebody that was a little hopeful that the stock would fall and maybe things would be done. I'm not sure. But let's take a look. We go over to the chart here. We'll put Tesla on the chart. That's going to be your purple number there. And in the orange is the open, the short interest as a percentage of its float in terms of that. Now, we don't get the most updated numbers for another week and a half, almost 2 weeks now. But we expect to see that drop, obviously, with the recent rally there. But if we zoom out, you can see that overall short interest has been pretty low for this stock and obviously declining. So you could say that some of this is a short covering rally, but you can't say the entire thing is short covering rally. It's just not enough shares there to cause the pop that we've seen. Obviously, Tesla looks really, really good lately. So we'll see how that goes. Very extended in the short term. Look at that performance there, just off those lows. Really, really cool to watch. Anyways, let's go over to this here. So Like I said earlier, you got 68 days now where the S&P 500 has not closed lower than 1% or more. So it hasn't had a negative 1% day. In fact, here's where we're at. So we've got this on the chart here. Can I zoom it in? I want it to be zoomed in more. Well, that's too much. I'm sorry. I want to zoom this in a little bit more. Let's see what you got there. It looks pretty good. All right, so we've got 68 consecutive days in the S&P 500 with not a 1% drop or more. The last time that happened, October 2nd, 2019, highlighted it in red for you here. That doesn't mean you can't have down days. Of course, you can have down days inside of there, but as a tool or as a measurement tool to say, we got to cut it off. We want to analyze it. We've got to cut it off at some point. If you use minus 1% or greater, you got October 2019, that was the last time that happened. Since then, no loss of 1% or more. And actually, if you look at it, you've only got about 4 down days that were anything of any real significance, that even flirted with the idea of being down 1%. Really 2 of them, the other 2 down just over 0.5%. So that's 68 consecutive days. The question is that a lot? Is that some kind of record here that we should be excited about or not? Well, actually, if you look back through the entire history of the S&P 500, we went back to 1928 to see what happens there. There are only 26 other times where the S&P has had a streak of 68 days or more before having a day or in between days of a minus 1% down day. The most impressive, or the record for the number of days, happens to be 174. So we'll pull this up on the chart here for you and zoom that in. There you go. It looks a little bit messier because there's a lot more days in between. 174 days is actually the record for the number of times the S&P has gone between minus 1% days or greater. You got to go back to 1963 to find that out. So here's the day that happened back in early 1963. By the end of 1963, you had your second down day. Again, doesn't mean you can't have many down days in there. This is not some sort of bullish stat that they're putting out there. It's just a fun way to look at something that's happening in the market. So you can have many down days in there. You can also have a downtrend in there. 1963 happened to be a positive year, and it was quite consistent. Looked an awful lot like last year if you happen to compare years. But 174 days is actually the record. That's 8 months of not having a 1% down day. So if you think you're frustrated now, you can basically double, or well, you can almost triple the number that we're at right now to break the record that we have there. A couple other little areas to look. You got election day. Well, just before the election here. That's not going to work. Let's just do it like this. See? Fancy. So you got 109 days was another record that was set before the election, 2016. So I highlighted those in red for you here. Just before the election, you had a down day of just over 1%. And it took all the way until March of 2017 for you to hit the next 1% down day. Again, you have many down days inside of there, but, you know, as far as being big down days, you just didn't have them. That's a 109-day streak going from election to there. You also have a period of time at the end of January, at the end of 2017 going into 2018, it was 112 days where you have those stats. So the bottom line is we're at 68 days. It's interesting. It's just not impressive, right? So if you want to look at something like that, or if you happen to catch a headline, it makes you feel like, oh my gosh, the market's going to move without me or something. Now you kind of know the real stats on that one, at least how things go. We mentioned the earnings coming out tomorrow. You also got 3 Fed members speaking before the Beige Book. The Beige Book comes out at 2 o'clock tomorrow. That'll get some headlines, right? It's not like, you know, it's old news, but it's new reported news in that sense. So the Beige Book coming out tomorrow. And then dividend-wise, I think you just have Accenture. Yeah, Accenture reporting, they're paying out 80 cents in dividends tomorrow, and that's basically all I have for you. I'll take a shot here and see if I can answer some of your questions, and we'll go from there. Hope you enjoyed the stats today. Just a little something extra to bring to the show. You like your Beyond Meats? Beyond Meats, just an impressive run over the last couple of days. You have to argue it's a little bit extended in the short term. You'd expect to see people that have losses on that position want to take some of those smaller losses, or if you happen to buy that dip and sit there and wait, you'd expect to see people taking profits. You saw a little bit of that today when it tried to peak up and tried to get going there, but looking good. Yep. I would say in the short term, she is just overpriced, overextended, overbought, however you want to say it. Yep. So earnings coming up on February 4th. I didn't know that. Yeah. Yep. Cool. Bitcoin seems to be waking up. Yeah, I saw it, a 7% gain on the day today, up 610 points. Bitcoin coming to the top of a downtrend there. So if you're a technical trader and you're looking at that, I don't know how technical trading works so well on Bitcoin, if it really does. There's some stocks it works well on, some indices it works really well on. There's other stocks that just don't care, right? You can't trade it with a technical mindset. You're just not going to make any money there. So, but yeah, Bitcoin up 7% on the day, waking up from last week's move. Last week it got sort of popped out of nowhere there. Will Luckin Coffee do well? Luckin Coffee is not involved in that. So you can't say that there's a correlation between Luckin Coffee and the trade war. You could say there's a correlation between like Micron Technologies and the trade issues because they get most of their revenue from China. So you got to look at that, right? You got to look at companies that get a lot of revenue from China, bringing them back into the U.S., or they're exporting or importing over to China. That's where you want to really kind of focus. The trade deal, by the way, expected to be signed tomorrow. There was some news in the middle of the day that the tariffs were going to remain on until after the election. That wasn't new news, by the way, but it did shake the markets in the short term. So we'll see. There's also a report that they had, there's actually no consensus on where they go from here. So that could be something that brings a little bit more fear into the markets, where we thought there was going to be, okay, next let's go on to phase 2 or 3 or 10 or whatever we're going to do. There's actually that report that they don't have any real guidance on what they're going to do going forward. They're just trying to get through this phase 1 here. So we'll see. Yeah, there's that question there on it, that the phase 1 didn't deal with tariffs. That came out. It did hit the markets there, at least in, what was it, like midday or so. It was kind of a real quick sell-off in the stock market, but nobody really freaked out too much. If I bring up like a 5-minute chart or something, so here we are throughout the morning, everything just trending higher, everybody excited about earnings, and then that's where that headline came out. So at one point throughout the day, we had erased everything that we had gained and turned negative before, sloshing around a little bit. But that news basically already out. Yep, cool. You're up about 22% on Lulu. Should you take your profits and go, or does it still have more room to run? Always have a plan ahead of time, right? Always know what you're going to do, whether you're going to take some money off the table and let the rest ride, whether you're going to put a real tight stop loss in there, like a trailing stop. Wouldn't be a stop loss, but a stop at that point. You want to have a plan for that ahead of time. If you make X percent, what are you going to do? And it's okay if you break it into pieces, but never, ever buy a stock and then just sit there and go, well, now what, right? That's rather difficult, so be very, 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 very careful about that. Talk about Disney. Does it look like a run-up to previous highs again? Today was a good day. I mean, you like to see what happened today, especially the report that came out. You like to see that sort of translate in earnings, at least the very start of it. It's going to be early, of course, but you'd like to see a little bit of translation there. I would agree. Yeah. Oh, yeah. How much do you attach value to the Morningstar rating, say an ETF Chinese market 3 stars, not 5? I don't know. I don't know how they really calculate what. I'm sure there's a lot of great private proprietary metrics that they use there, but I don't know, to be exact. Just be honest with you. Why are REITs non-qualified dividends? I don't believe all of them are. If it's classified as a REIT, then yes, they would be non-qualified. But so REITs as a product, everybody gets excited and they go, well, hey, look at all this dividend yield. I got to buy some REITs here. I love my dividends. The reason that they pay such a high yield is because they have to. I believe it's over 90% of their income has to be paid back to shareholders. They do that in the form of a dividend. Most stocks, almost every other stock, doesn't have that qualification. So when they pay a dividend, they're paying back shareholders, and it counts as a qualified dividend. Non-qualified is because the company is forced to pay it back anyways. They can't operate if they don't. If they break that rule, then they're no longer classified as a REIT. The tax classifications go away. So there you go. I hope I answered your question. Any economic news to keep in mind coming into this earnings season? You got the Beige Book tomorrow. Next week it picks up a little bit of the econ news. But for now, no. Everybody's focused on earnings there. What time is the signing ceremony tomorrow? I don't think that was released, actually. I know Vice Premier is already here, so they could kind of get that done any time. But I don't know if that's going to be something that they make. I'm sure there'll be like cameras on them while they sign it and everything. But I don't know what time that is. Hello, Halcyo. I love it. Welcome, welcome. How do you feel about lucking? I'll keep the same comments I had the other day, right? It blasted off. There's a lot of stocks that have had a lot of sort of too quick, too fast type runs. If you own it, you'd like to, well, if you are looking to buy it, you'd like to see it pull back or go sideways for a while. If you own it, then the question is, at what point are you going to take your profit? Or at least some of your profit. That's an amazing move right there, right? Got a 100% gain plus on the stock, even if you bought it any time prior to October. If you bought it even halfway through the rally, you got a 50% gain. What are you looking for? You know? Is Wells Fargo doomed to be left out of the financials party? I don't know that they're doomed, but in the short term, you have every reason for people to want to move on to other stocks. It's always difficult when you have easily comparable stocks that are doing much better than the one you're holding. It's not always easy to find them. Like in the retail space, you got to do a little research. But in financials, there's only, as far as the big like money center banks, there's only a handful of them to look at. So if you got to pick a stock to invest in, it's very easy for someone to compare the difference. And that's what you saw today. People just going, well, guess I'll go over to Goldman Sachs or JP Morgan. They're firing on all cylinders. Everything looks good there. There's not as many people that are as informative and well-spoken. Wow, I'll take that compliment. Well-spoken. I don't get that one often. Let me save that one for the misses. Cool. You think it'll be a big show? Yeah, I mean, I imagine it'll be on TV. I don't know of any scheduled events. I don't know if that's been planned out yet, but we'll cover it. That's supposed to happen tomorrow. In the meantime, I think I've covered everything I wanted to cover for you. Oh, Zoomies, by the way, expects to see earnings a little bit better than expected. So Zoomy, yeah, almost back to highs there. They had a good holiday season, apparently. So they guided a little bit higher ahead of earnings. All right, I'll wrap it up there. I hope you have a great rest of your day. We'll be back tomorrow to do this all over again. Be sure to hit the subscribe button, thumbs up button, all the stuff that all the YouTubers ask you to do. If you do that for me, I appreciate it. Thanks for watching. We'll see you tomorrow. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.